Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today we will continue with our technical analysis of Tesla. I will also add Amazon and Shopify at the end of the video. A few of you commented that you found those helpful, so I will include them. It's probably easier for me to include them in the same video as opposed to making separate videos with separate editings and thumbnails and whatnot. So I hope you understand, but I understand that the vast majority of you are interested in Tesla, so of course you can always turn off after Tesla. I will have a timestamp below if you are interested in jumping ahead to Shopify and Amazon accordingly. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. I also would like to thank all of you guys for being so wonderful and supporting my channel. I have reached almost 1,600 subscribers as of today. The channel was created in January of 2021, so within less than 9 months, I've reached 1,600 subscribers, which is the number that I could not think of. When I started the channel, I just wanted to educate a few of my trading friends and investor friends about the long-term trend of Tesla, a few other stocks that I wholeheartedly believe in, such as Amazon and Nvidia. But over the last 9 months, I found that a lot of you have found the channel helpful, and that's very encouraging to me, so that I can continue to create more content for you guys. Once again, thank you very much for supporting the channel, and I will try my best to keep up the good work. Today we will start with a daily chart from Stock Charts, and the reason we do that is because I want to point out something to you that my Think or Swim chart does not necessarily display. Right now, at the time of this recording, it is 3:45 Eastern Standard Time, so we still have about 15 minutes left to go, and Tesla is hovering around $754. If you can see here, there's a black candle phenomenon that just appeared yesterday and today. If you look in the past, every time the black candles start to show, Tesla tend to fall after that. It doesn't always look like that. For example, this black candle doesn't signal a fall. This black candle doesn't signal a fall. It's also a reverse hammer. But if you look at, in general, especially if you have a semi-dark cloud cover here, but it ends with a black candle, the next few days it falls a little bit. Here, this one is a black candle, it falls. So from this, I gather that the last 2 days with these two black candles, it could signal a beginning of a bearish turn. And I know we were just bullish about 2 days ago on this candle right here on the 7th, and then now we're looking to turn bearish. This is just my observation with stock charts. I can't really say for sure that it will materialize, but I am less optimistic about call options from here on out, only because of these black candles that has shown in the past. Going back to my Think or Swim chart here, you can see that today's daily candle is also a failed rocket launch. In comparison with the last few days, it doesn't really signify a whole lot. Usually the failed rocket launch will means reversal if we have a gap up and then it fails to materialize. It never got to 768, which is the next resistance. So right now the next target is 768 on the upside, although it's probably looking to the downside more than the upside based on black candles and the overall market conditions. Let's take a look at the QQQ. If you can see from my chart here, the QQQ is down 0.3% today, so that's not huge. The daily candles still look just like a quick retracement, nothing to be worried about there. Let's take a look also at SPY to kind of see where it stands. Once again, a little bit of a retracement, not even all the way down to 50-day simple moving average yet. 50 days SMA is at 441 and SPY is still at 449. So I do think that this is not even a correction, it's just a mild retracement, and I wouldn't be surprised if the SPY would move down to about 441 in the next few days, just for a quick retracement before going back up, if it does go back up. Now, back to the Tesla chart. So because the overall market condition is negative, Tesla, unlike the rest of the market, is holding green, which is pretty impressive. But the candles do not look super promising on the bullish side. Once again, we continue to see the 50-day SMA and the 200-day SMA, the white and the red lines here, are kind of intertwined with each other, and they have been moving at the same level right now. So on the hourly, you could see that the trading range on the top of the pivot point could have been 777, but Tesla never got anywhere near 768, much less 777. So the momentum has been temporarily haunted, but it could also be the next tranche of consolidation. You can see that consolidation happened the last week, and then it broke out a little bit, slightly retracing, and then consolidate again. If it were to get back to the bullish sign, it needs to stay above 768, which is my resistance right here. If it does that by the end of the week, then it's relatively positive. But if not, if we see another sideways movement, it might be signaling that it is topping out. The trading range for tomorrow is on the top end, 766 on the pivot line here, but my resistance is 768. So I do hope, not expect, but I do hope that it will get there and stay around there by the end of the day tomorrow to top off the week. But the middle pivot point right now is 756, and the bottom pivot point is 750, which is about $5 from here. So tomorrow looks like it is a consolidation day if it is to observe these three pivot points. If Tesla were to move down, the support right now I have is 746 and 735. After that, then I have 704, and then we have a strong support of about 690. That is around where the 50 days SMA and the 200 days SMA meet. So 690 to 687 would serve as a very strong support. Some of you asked me if this is a good time to buy Tesla at 750. If you are a long-term shareholder and you're looking at a stock that has the potential to run to $3,000, I don't think it matters where you buy it, whether it's 700, 750, or even 800, right? But of course, there's an optimal point to buy, and I think that Tesla might be pulling back in the next few days. And if so, the optimal point to buy would be below 700. Looking at the weekly candle, it is actually not too bad. So we have one more day left to go. And if Tesla ends the week right around this area, give or take a few dollars, this weekly candle is still pretty bullish. It would become a failed rocket launch if it ends the week at around 743 or below. So that is about $12 from here. If Tesla does get to below 743, I would say that it would turn bearish in the coming week. So it's important to note that today is September 9th. We are exactly 3 weeks out from the end of the month. So we would expect Tesla to announce delivery and production numbers by the first few days of October. We could see October 1st being a day, but if Tesla comes out early in the morning before market opens on October 1st, that means that the Tesla team only have a few hours to work on the numbers. That is still possible because they should have the numbers ready by then, but I think that is a little rush. They probably will likely announce the numbers before the market opens on Monday, October 4th. So those are the 2 days that you're looking at. If you are looking to swing an option, I think October 8th is a good expiration date. So keep that in mind. And as a result, you might be paying a little bit of a premium since October 8th factors in the delivery result date, which is either October 1st or 4th. On the other hand, I do think that if Tesla is going to retrace next week, then we would wait out another week before entering a bullish call leading into October 1st or October 4th. I think that this quarter, which is the third quarter of the year, we will have a very good idea whether Tesla could deliver close to 1 million vehicles. And so that is something that every Tesla bull and every Tesla investor is looking for. And by the end of Q3, it will become very apparent whether that is achievable or not. I certainly think it is achievable. I think my estimate comes down to between 880 to low 900,000 in terms of vehicle deliveries. I think a million is quite achievable. Today, if you're reserving a Model Y, you won't have it until January of 2022. So in a way, you can see that Tesla has already sold out of its capacity for 2021. And that is the capacity for the Fremont plant and a little bit of Giga Austin, which should be producing vehicles by the end of October or so. So if Tesla already sold out of its capacity, even with a 2 months worth of Giga Austin, I think that the number for 2021 will be very impressive, and we will start getting a glimpse of it in Q3. So I'm excited for that, and I think for option trader, we're looking at the week of September 20th or the week of September 27th for any kind of movement, particularly the week of September 27th. Let's move on to Amazon. Amazon here, today is Thursday. We still have one more day to go, but looking at the weekly candle, this particular weekly candle right here, it is a very bearish candle. It looks like a reversal, and that is a failed rocket launch. We can see that the earnings gap, which are the blue lines here, it would fill that gap if it gets to 3,600, but right now Amazon is still about $125 from filling the gap. So with this weekly candle here, I don't expect it to fill tomorrow and possibly not next week. We probably see a slight retracement next week. Today, the price action is a little bit disappointing for Amazon. The volume is 83%, so it is not too low, but it is definitely below average. Amazon started out really strong, and it got to all the way to $35.49, almost $35.50, which would leave it only about $50 left to fill the gap, but it could not maintain the momentum. So if I'm looking for an opportunity for swing trading, this would be an opportunity for a bearish bet. So this is a bearish engulfing candle, no doubt about that, right? Even though on the daily, Amazon is pulling a bull flag. And I think that the bull flag has been breaking out a little bit the last 2 days, but today it lost momentum. So there are a couple of ways you could look at it. If you swing a little bit longer term out, say a month or two out, you could wait for Amazon to retrace back to 50 days SMA, which is $34.63, so about $20 from here, and then you take a call so that it could fill the gap. If you are looking for an immediate trade to the downside, capitalizing on the fact that it has a big bearish engulfing candle today, you would open that trade. If Amazon happens to be somewhat green tomorrow, say if Amazon somehow is slightly green in the morning. So if Amazon is slightly green in the morning, say $34.95 or $3,500, I think that's a good opportunity to take a trade down to about $34.60. Tomorrow is Friday. A premium could deflate really fast if you play same day options, so be very careful there. But that would be how I look at it. Personal preference is that I'm going to swing it a little bit further out, so I'll wait for an opportunity for Amazon to retrace to $34.60 or slightly below $34.60, and then I'll take a call all the way to $3,600. Let's move over to Shopify. Today, the price action is encouraging. It's up $26 to $15.04. However, on the daily candle, this is still an inside bar, and yesterday was a pretty bearish day. So today I wouldn't say it resumed bullish or anything like that. If anything, this is just a bearish continuation, and tomorrow we might see more downside. A few weeks ago, Shopify made a gap. It went from 1483 to about 1509, and it did not fill the gap that day, leaving a big gap there. It has been moving up, and then yesterday it filled back that gap. So that's one thing that we need to pay attention to and continue to observe, is that one day Shopify will fill that gap. We don't know what day that is, right? And so apparently that gap was filled yesterday, and today was just a consolidation candle. We also see that there's a head and shoulder pattern here with the shoulder, the head, and the shoulder here. So I do think that Shopify now turns more bearish than bullish, and it could fall to 1450 being the first price target, 1362 as the second price target, and then about 1279, which is the 200 days SMA. Right now, Shopify is right below 50 days SMA, and so it could fall all the way to 200 days SMA before calming back down, especially if the market will be going through any kind of correction or retracement. We expect Shopify to move back down. As far as trading range for tomorrow, let's take a look. The trading range is not huge. On the upper end, you're at 1520, middle pivot point is 1504, and the bottom pivot point is 1469. If Shopify gaps down, I would wait for Shopify to fill the gap on the way up, and then I would short it right when it hit to about 1504. If Shopify gaps up, I would gladly enter a put for it to fall all the way down, because I do think that on the daily level, I expect a bearish day tomorrow, and particularly so if the QQQ and the SPY cooperate, then I do think that there's a really good chance that Shopify will continue falling. Especially with the head and shoulder pattern and the fact that today's candle is just an inside candle after a major bearish candle from yesterday. If you are a long-term shareholder of Shopify, please do not panic. This is just trading. It has no fundamental indication for the company. If you fall in love with the company for its fundamental, there's no reason to change your position. But for me, I am completely emotionless when it comes to Shopify. I do not own any shares, and so I don't have a bullish or a bearish bias. And so I will go where I think the stock would likely head. And I could still be wrong, but I will take my chance given the probability and chart reading here. So good luck to all of us. Happy trading tomorrow, and until the next video. Bye.